Charles Goddard here. This is another in our mini video series as we address various topics that could affect your trading and your success, the success of your accounts. So this is just very quickly a look at subjective trading and its effect on your investment accounts. And really, the people that transition over to the 10% profitable trader have really managed to take this on board, and it's extremely important. But I'm not going to bang on about it today. I'll touch on what it means, and we will go from there, and hopefully the over time the meaning will sink in. But before we get to that, let's have a little intro of me. There's my picture there on the screen, and you can see designations, some of them anyway. I can tell you that those took a lot of hours for me to get them, and but more importantly, I spent thousands keeping in company with veteran traders from the famous commodity pits of Chicago. And it was those fellows who taught me that book learning is one thing, but to that theoretical learning, you need to bring a practical application. And that's what I'm going to bring to the table for you in these videos and training sessions. Okay, so let's start to try and grasp the meaning of subjective trading versus objective trading, the trading world versus the world of trades. And I think what we're going to do is I'm going to tell you a little story, and this is Dennis's story. It's a true story. Dennis told it to me, and one day I met Dennis totally by chance in a pub, and he somehow had found out that I was in the investment business, and so he was hoping I was going to do that doctor thing, like, hey doc, I've got a pain in my back. Could you help me out while you're standing there doing nothing? Anyway, he wanted to talk about investing. He wanted to talk about what he had done, and there was one aspect that I thought was worth repeating here. Um, uh, and it was how he came to that same pub one night, and he went into the loo, and he was standing there between two business types, button down, ties, all that stuff. Must know what they're doing. They've got nice clothes on, and they were talking through him, over him, whatever. And they were talking about this new company that was just absolutely the best thing. It was the greatest thing since urinals. And so Dennis comes out of that bathroom apparently with a new plan, with a plan. And I said to him, Dennis, you couldn't possibly put any money into something that you just heard about from two guys you don't know while you're in the toilet, for God's sakes. Anyway, he said, yeah, he wasn't going to miss out. He'd missed out on a couple things through inaction, and darn it, he was not going to miss out on this. So he put a bunch of money into whatever company it was. I don't know what he told me, and needless to say, he lost a lot of it. And this is the perfect example of the trading world where people take stabs at something. They have no controls whatsoever, no reason for what they do. So consequently, they become victims of their emotions and their talking heads and their Fred Murray and all kinds of stuff that causes them to place trades with their hard-earned money for no other reason than I heard it in the toilet. And this is not what we're about. And I can tell you, it's tough enough, even with your discipline, tighten down to make money, and you certainly will not. You could catch lightning in a bottle for sure, but I can promise you this: you will not be a consistent trader if you pursue the subjective world. Just as a quick example, headlines recently: gold is going to $3,000, so what are we doing with that information? Are we running out to buy gold? How much of that euphoria has already been priced into gold? Do we know? We're just gonna jump on it? Are we because we read it somewhere? Because that's what people are doing. We want to. Gold is for sure in my fishing pond, and I will buy gold once it gives the signals that that I employ, and I'll place that gold trade based on my process of a certain percentage of the portfolio, my stop being a certain place, and my risk being a certain level. And that is called the objective way of trading, and that's called the world of trades, and we take every trade that our method kicks out. So anyway, let's stop it there. We're gonna pursue this further in other venues. So you will see and hear more of this, and hopefully we will get you onto the objective side of the ledger and away from Dennis's side of the ledger. Anyway, thanks for listening. Take care, and bye now.